Good afternoon, everybody, and welcome back to another StockTwits Q&A session. We're going to be answering your questions live. I'm joined by Scott Red Dog Redler. Scott, another good day in the market. What do you think today?
Well, I was kind of out for a big portion of the day, but we came in today. We spoke about levels and whether we were stalling or whether we were digesting, and I picked digesting because of the action out there. So, with that said, I feel like people have had a glass half full or a glass half empty, thesis for the last year, the last 4 years. I've tended to be glass half full because that's the kind of guy that I am, especially when, today the reason I was at a funeral. And just to, I tweeted about it, I talked about it, so people were asking me. So, first of all, I want to just thank you to everyone who was kind of concerned, and just, it's never easy, especially when it's like out of the circle of life. The guy that passed away was 42 years old, 2 kids, 10 and a 7-year-old, and brain tumor. So, you listen to eulogies at these funerals, and basically makes you think of, all the reasons why a red P&L is not a bad day, or, you don't do an idea, it's not the end of the world. That you need to live life, you need to work on your process and enjoy yourself and, provide for your family. So, with that said, I'm sorry to bring everyone down in the beginning. Sorry, Brittany.
That's okay. It's not bad to put things in perspective, and you had one of those days.
It was one of those days, and it was actually also, just to relate it to the market, it was one of those days when I was more of an investor. I came and I left, I had 6 or so positions. I left at 10 to 10. I put some stops in, and I said, okay, I'm going to be with these things. I didn't have, add-on trades and things breaking out, and I wasn't able to move and groove like a active professional trader, but there are some people out there that can't do it. So it kind of goes to show you also that you could be on the road, you could be at a job, you could be doing other things, and not just a professional trader and make money by picking the right stocks. So anyway, I'm babbling really early, which is a bad sign. So I'll try and bring it back to what your original question was, right, which was,
what did you think of the market today?
Okay, from afar,
right,
it seemed as if we broke above, 2 different small resistance areas. Didn't have enough power in the S&P to break above it, but there was a lot of good individual stock movement. So let's go right to the chart of the S&P. Let's take a look at that bull type flag that we've been watching. First of all, this has been the trend, which we've been following since November. Last little gut check was right here, right around the 100-day. If you guys remember, this outside day on May 22nd, we talked about this type of day would be a day to finally get a little bearish again, take some risk off, and maybe get short, because that led to a 6% move lower. Okay, from there, we had to move off the lows. We digested. This was your day. I was talking to Ben Banks, a very, very young, energetic, talented guy in the stock market, saying like this is when he felt comfortable putting on core longs, and I would say that's when you should have, right? That's in the middle of the range, breaking above the 50, breaking above the downtrend. Here was where you got paid for it, and now up here, it's hard to put on heavy size in anything, even though we are taking out highs. So with that said, let's take a closer look to this flag like we did this morning and just show the levels, right? Here was your levels that if you were rolling up shorts, you probably had to make a few adjustments, especially if you've had it during this, the course of this move. Or if you're looking to, make some cash flow through spots, this was it right here. 1684 to 1680, this was actually both 1684. Here was 1687. We closed above it at 1689, hit a high of 1693. So now every newspaper out there is going to be saying all-time highs, all-time highs. This is not the day to get excited. The day to get excited is if you bought some here, or you bought some core longs here, or maybe, headed in this thing. Into new highs is when you take your profits. So the time to get excited is if you were stuck with this trend, okay, in a macro environment or a macro account all the way up to here. This is not the time to get excited. The time to get excited is only if you were able to have a process and you were involved during the course of this move, which could have been very profitable for you with many different stocks, many different sectors, and many different strategies.
Well, we've seen a lot of healthy rotation. We've talked a lot about potential setups in various sectors, but Jay Eden here has a question for you. He asks, what sectors do you think will rally into the second half of the year?
I think it's going to be, you can't pinpoint what sector. I think it's going to be a lot of the same. Certain sectors during pullbacks are going to, not pull back the most and then continue to go. So far, in that pullback that we saw in May, we saw a pullback. And the sectors that held above or held higher were the ones that went first. And this time, okay, which was different than the first, quarter where you had different leadership, the Russell held in higher, Retail held in higher. The banks held in well. And even the transports, and they're the ones who went to new highs first, ahead of the spiders. So they were, they were leading. So you look here, here was your first breakout move, above the highs here, but you already have the Russell, okay, which is well above. So hopefully you picked out that leadership, well below, and you created some alpha for yourself. RTHs, also, big type move. Well above those areas. So at this point, a little bit overbought. Today, the banks, okay, that was the place to be. XLF, right? That was a clean, look at that clean breakout in the XLF. This was your digestion to get in a tier 1. Here's your tier 2, and then even a nice add-on trade here. Okay, we talked in morning call about the banks, I think once or twice in the past week or two.
And we have some questions on them, if you wanted.
Should we go right to the banks?
Well, we could, if you want.
Let me show one more chart.
Sure,
okay,
sure.
I want to show, what did I want to show? I wanted to show the IYT today. Boom, clean breakout, right? So still, moving ahead. The other day, the what's it called? Some of the airline stocks popped up, and here was 116. Here was your high-level base. So even if you didn't get it when it broke this downtrend or in this digestion, you could have been sitting right here watching the 8-day catch-up, day 1, day 2. Okay, so still a lot to do, but at this point, you can't really say, like right now everything's kind of in motion. So next time we could pick out what sectors to go to for the second half of the year will come from our next corrective phase, whenever that is. Right now, things are going, and just keep looking for type patterns.
Right. Well, can we dive into the financials?
We can do whatever you want, Brittany.
Okay,
I'm
well,
here for you.
We do have a couple. Well, you're here for everybody else, actually, who asked the questions. We have some on Bank of America and JP Morgan. We have one from MBM Capital, who says, what are your thoughts on financials from here, specifically Bank of America and JP Morgan?
That's a tough question. Like a lot of people were like so happy on the Twitter's feed because we've actually tried to continue to pound the payment. The what? The pavement.
That's right.
Yeah. I'm like, payment? No. Anyway, pavement. It's been a long day. So Bank of America has been the stock that I've chosen to try and be long 90% of the time. Okay, and it was actually one of the stocks that I held through earnings because I figured if it was down a little bit, I would stay with it. And they're just multiple different entries for Bank of America. You could have kept it in the drawer and said, I'm buying X amount of shares. I'm just going to let it stay there. You could have said, okay, I'm going to buy, tier 1, and every time there's a day trading, nice power-packed setup, I'll get to tier 2. Then it gets in motion, book some cash flow, but then stay with what I want to stay as a core because I think it goes higher. But you look at the chart now of Bank of America, and it's very extended. Okay, here was one of the last, I think, quality buys for a core, which is right here around 1330, and then after earnings, okay, a lot of stocks couldn't go up with earnings. A lot of the bank names didn't make new highs. They tried to hit it down, and they couldn't. So a lot of people positioned on the day of earnings, which was something different, and then here's your follow through. But right here, extended from the 8-day, extended from the 21-day and the 50-day, hard to enter, especially if you look at the weekly chart. Go to the weekly chart and you'll see how many times we've talked about this. Okay, the best, I remember this trade that everyone was watching was right here, right around $10. Here was your channel. This was a day where you could have pushed your Shift B button as much as you wanted to, and you had a nice clean 3-day trade into the 11s, and then it's been stutter stepping the whole way up, not violating this trend, and not even violating this trend. So, with that said, 3 bars in. You have to be a bit more careful. So let's just go to the monthly chart. On the monthly chart, if you're taking a long-term approach, you will see that Bank of America, look where it was, and look where it is only now. So the next real, I would say point of resistance would be somewhere around here on the monthly, and that comes in $18, $19. My target for the year was 14 to 16. We're in that target area now. So at this point, if you've missed it and you have no Bank of America in your portfolio, I would maybe wait because at some point we could probably retest that 14. And then as far as JP Morgan, just to show you how different setups, JP Morgan's one that I've just been trading here and there, haven't been sitting in it, haven't been holding it, just because I don't have to be in so many banks, and it's hard to have that type of exposure everywhere. So for JP Morgan, I think I tweeted about it 2 days ago. I was like, JP Morgan's flagging, maybe buy a feeler versus, I think it was 54.50-ish. We talked about it in the morning call. I think we had it in the note a few times. Then finally, today was your day to add. And I didn't add because I was on the road. I was, an investor, and I just sat with what I had, and, and it wound up working out. But if you were a trader, okay, and you were sitting in front of your seat, okay, here was when, earnings came out. It didn't really have any traction, but it never violated the 8-day, which means it was very strong. Here's when it started perking up. I think this was the day we tweeted, I said, buy a little bit here versus this area, which was 54.60. Never violated it. Perked up a little bit yesterday, and then today was your day to add. This was your day to buy above 55.60 for a nice clean move through 52-week highs for cash flow. So, tier 1, maybe add a little bit, and then, add through here, sell on the close, and then stick with some. But overall, that's how you make cash flow on top of, what's been a really nice trend, and JP Morgan still looks good. Let's go to the monthly chart of JP Morgan, and you will see this is a little bit different. Didn't get as battered and bruised in the financial crisis, but it also on a monthly basis is just coming above this peak, holding above it. At some point, this stock could be one of the few stocks to make historic highs besides Wells Fargo.
Wow.
At some point.
Yeah. Well, we've talked a lot about Tesla as of late. Had a big day yesterday, regaining momentum. Stumbled a little bit today. I think it's down about a little over 1%. But we actually have a question from Olive asking what level you would consider shorting it.
I did it today. I even tweeted it, I think at like 9:20. I said yesterday was your day to buy the open with the pivot of 107.30. Today, I think it was in my head 121.50. It was up $1 or $2. I'm like, use 101.50 as a pivot, and you could probably short up to 122, 124. And I was in for 20 minutes, and that's where I made my cash flow when it was up $1. Actually went through the pivot, stalled a little bit, shorted some, added when it broke 121.50. I covered into 120, 119 and change. I was like, you know what? That's a nice little day trade.
Right.
Prove it could be done. Trading the end of the ranges. And you look here at Tesla, why not? Like, here you go. 2 different types of red tog reversals, okay? First of all, if you would have seen this exhaustion gap, which it did on relative weakness this day, could have got you out of some of your stock if you were long. Especially then the confirmation came when it broke this little rising trend line. Okay, sliced through the 8 and 21. Then, if you recall yesterday, it traded below 107.30, okay? Went as low as 104.50, and once it came back above, that was your buy. There you go. And you could have picked and choose your spots, and it was wound up being like $14 or so. I took, I think, like $3-4 out of the first one, and then there was a midday move. Then today, it opened up. Okay, and look at the move it had from 104 to 122 is worth a trade short. And then I was thinking we can get probably a fade. Then at some point it could hold, and then we'll see what happens here if it goes sideways for a little bit for our next trade. You look at the 5-minute version, you'll see, the type of trade it was off the open because, it was fast and furious, which is what we like. Okay, here's where it opened up. Okay, this was your pivot, which was the prior day high. You go right here, and then once it opened up, started to fail, you could have shorted it to go from positive to negative, went below it, and then boom, you had a clean move down all the way to 10 o'clock to 117. I covered somewhere around here because that's all I was looking for was a quickie, and that gave it to you. And then it reversed and, wound up being okay. It closed up, a little negative, but at this point now, I don't see a clear-cut setup, in my humble opinion. Now you have an inside range where you have the 21-day and you have today's low, and see what happens here. See if it could stay tight in this top third of this wide range bar. Then if it does for a little while, maybe we get a buy through here. Or, if it trades below yesterday's low, maybe you get a little bit more of a retracement. If it gives back half of this bar, then you'll know that this was just, then it's really just a choppy mess, and you better be careful because then, the range gets bigger and then it could be coming to the lower end. So let's see how it handles this top end of the range. But overall, some really nice tactical day trading cash flow, and also if you're an investor and you've been sitting in it for a long time, congratulations. Just let's be a little careful earnings the next week, and we'll figure out how to handle that because we see if they miss, even the best of the best get crushed, kind of like Google after hours.
Right.
Which I think I want to get into. Is there any questions on Google right now?
Actually, we don't have one popped up right now, but why don't you tell us your thoughts on Google right now?
Well, Google is an example of why we don't take stock into earnings. Because even if you have a long thesis or a short thesis, this and that, you never know into earnings unless you've been holding something for multi-years. Then it's like, okay, you could sit in it. With Google, it's been hovering around 915 or 900 for at least a few different times. And I'd say over the last 2 months, how many $1,000 price targets has it gotten? I don't know, like 7 or 8, some $1,100 price targets. So it looked set up to go higher, right? It looked set up. It was holding right around 910, 920. If the report was good and the guidance was good and maybe even a stock split, it could have taken off. Instead, it was light, and and it's wound up being down 50 points. So to me, I'm like, you know what? I like the Google setup. I think if any company could beat, I'll take that. So instead of being long the stock, which I know would hurt if it was down 40, 50 points, I said, let me take some options. So I did some options in Google because risk to me was premium paid. Okay, it was hovering here near the highs. Every single analyst in the business was putting upgrades on it, so it shows you how good they are. Okay, and it technically was set up. Nice trend, holding the 8-day, came off a little bit, so it showed you that, you had a pivot here at 928. So I came in prepared. I said, you know what, let me buy some 925 calls. Risk is premium paid. And then if it trades above 925 and 928 after hours, I'll be a buyer of it, because that's when it can go through all-time highs. And then maybe every one of those analysts that have a $1,000 price target or above could be right for the first time in a while, because usually they're not, and then get paid, and I could be a buyer after hours and get paid, or if they halt it, do it with options. Instead, it's down like $50 now. My options are zero. I made a little money trading after hours, not as much, and now we'll have to figure out what the next story is here. Okay, we'll see what happens tomorrow. I think it was trading around 860. This 848 is pretty big support. You do have a point of reference right here around 863, which was, it was pausing for a little bit, so we'll see what happens. But it just goes to show you, it's kind of funny, because all the analysts hated Chipotle. Okay, that, Dunlop, or whatever the hell his name was. He was shorted and talking about it everywhere, talking in his book. Look at CMG, look at the move that CMG has had. Boom, and now I think it's opening above this. And, and so they hated it goes higher, and then every analyst in the world, was loving this all the way up here, and now they miss. So don't believe the hype, just, trade the action and do it in a way that you can handle the risk. And for me, it's, options are premium paid.
All right, well, we're going to go from Google to Yahoo, but we have to take a quick commercial break. Keep the questions coming.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and answering your questions live. We have a question here from JJ, who clearly pays attention to Scott because he has a question on Yahoo. And he says, since Yahoo has exceeded your 2013 projections at midpoint, could we see $35 by the end of the year? He says Marissa Mayer's executing and acquiring amazingly.
Yeah, she's doing good. It's always tough because I tried to be long this a lot of the time, almost as a core long, and with trim and trail, when it goes higher, all of a sudden you trim and trail it and you don't own it anymore, and you're like, wow, I should have held some. So with that said, we came into this report. What's this guy's name again?
JJ.
JJ came into the report, and we didn't know what to expect because we were hovering near highs, and we didn't know if the earnings report was going to have enough. That's why, like, even with Google, I was prepared with 928. If you remember with Yahoo, I'm like, I think the level is 27.5. That's the fight for whether we get some follow through. So you look here at the chart of Yahoo, you will see that on the chart, this was that pivot, right? Here's a high of 27.47. Here's the high of 27.69. So I said above this, if you're short Yahoo, considering the size of the move, you're going to have to cover, okay? And then if you're, I guess, that excited, there's your huge trade there. The time that I got excited about it, and the reason why I had it was because of this channel here. It was in a channel for 2 years. And then everything going media, this and that, I put 1 + 1 together. I said it's a buy above 1660. And then to start the year right here, figured it can go to about 24 to 25. Went there, went higher, and now look at it. So, when anything exceeds your expectations, you got to look further. Okay, now you look at the monthly chart of Yahoo, and it doesn't look as extended. And a lot of these stocks are starting to not look as extended. If you remember, I think they were offered like 31 to 33 by Microsoft, but they didn't want to take it way back when, thinking they were, too high and mighty. But I would say that not this year, but if she keeps executing and things keep going digital and Breakout keeps going good and Mackie keeps going off, on people. You could see a move to this high here of 34-ish, right? 32 to 34. 32 to 34 could happen this year, and then even maybe up to 40 at some point in 2014 if it stays up with this trend.
All right, so close to his target of 35, but maybe not by the end of the year.
Yeah, no, it's close. It's right in there. It could go higher. It's proved it can go higher, and it's just going to take time. It's a little overbought right now.
All right, let's talk social media.
Let's do it.
We have one from Golden Snuff. Hey, Scott, what are your thoughts on the social media stocks LinkedIn and Facebook? We have got Facebook coming up with earnings next Wednesday. Little more time before LinkedIn's August 1st.
Facebook has been my friend. It hasn't been. I got to get a little Reddit for in there. This was on the 2013 thesis, and it was supposed to 31 to 33 was a target, and it went to 32, I think, the first 3 weeks, which always shows you why sometimes you have to just take some off and figure it out. And then from there, it's been very choppy. Everyone's talking about valuation. Can they monetize search? Can they do this? Can they do that? And, I tried to buy it back a few times, and it didn't work until lately we just got a decent trade. You look at the chart. If you look at the overall longer-term chart, it is starting, in my opinion, to get better. You still, you never know how many quarters it's going to take to get full support, but you still could see some type of, cup and handle, I guess, or I guess it's a little thin, but look at the size of this cup and handle. Here's your descending channel. So with that said, it just had a move, so they're going to really need a nice earnings report to get above it. You take a closer look. Last time we talked. Remember last quarter when we talked about, potentially buying it? It came out with good numbers, went up that day, and then boom. And then that's when I got done with it. And then it came back in, held the lower end, and this was your spot, okay? We've been trading it a little bit. It's been showing some commitment. It had a bad day today. Let's see where it is come earnings. But overall, I think the vested interests out there would like this thing to be higher. There's just a lot of supply in here. A lot of people from the private placement, are stuck around 31 to 32. You had that botched IPO, so a lot of negative feelings. But overall, it takes a while for this to, get an accumulation before it really gets up and goes. But it's in the right area, right time. Let's see if they can continue to execute. My favorite stock in that sector was LinkedIn, and that was the first one because it had a really good IPO. A lot of people made a lot of money. Thin valuation wasn't as high. They didn't do as many angel rounds and to put it everywhere and dilute the hell out of it. But anyway,
good day today, up over 6%.
And it was in, I think it was
3%.
204. There you go, new highs. So it goes to show you that this was a little bit different. Okay, you go to this chart and you'll see before, let's go to the weekly. Before it, broke out here, it was a little choppy also. Okay, what wasn't in safe hands yet. It was back and forth, back and forth. And then as you spread it out, the chart pattern got a little bit more clear. Okay, let's continue to do that. A little bit more clear. And let's continue to do that. Okay. Let's continue to do that. Where is it? Oh, there it is. Okay. So here, it took a little while for this pattern to develop. And here was like sort of the same thing. Okay, here is your cup. Here is your handle, and your buy was coming across out of the handle, okay? And then finally, boom, 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 okay? So anyway, let's go to the daily chart, and you can see it a little bit. I guess that's why I wanted to do it more clearly on the daily chart. But anyway, okay, I'm just babbling here as usual. Okay, this is when it broke out, and it broke out on earnings, and now since then, it's been, this was last quarter where it rallied beforehand and wasn't enough, came in, held the moving averages. We had it off the charts at 184. I think we talked about it maybe on the price point sheet around here. Now it's at highs. So here we are going to go into earnings again at highs. I don't think you need to be heavy in it because it gave you the move before earnings, which is good, so you don't have to have the earnings risk. So anyway, I would not be heavy up here, but I would continue to trade it. It's still, in my opinion, considered a chosen one. Lots of nice little moves up until here. It's now above the high. You still have a few days until earnings, so just stay with it. And if you have it as a macro trade and it's in the drawer, just keep it there because again, the company's still in its infancy. It's got, it's almost like a hiring service that they call it. It's a very professional network. The float's still tight. They could still do a split. So have some, but trade some.
Yeah, it's amazing the articles I've read from recruiters who say how much they rely on LinkedIn.
Huge, and it's professional, and they have a lot of different businesses besides social.
Right.
They don't need like the advertising.
All right, let's answer Labor Boy here because I like his lingo. He says, trying to trade the homies, Lennar, KBH, DR Horton, buying low but getting stopped out. I want to be long intermediate to long term. Help, Red Dog.
Wait, read that again. I was my ADHD kicked in.
He's trying to trade the homies. He's trying to trade the home builders. Lennar, KBH, DR Horton. He's buying low but getting stopped out. He wants to be long, intermediate to long term.
Well, intermediate to long term, you have to give it space. Lately, the home builders that were the strongest group over the past year and a half got a little bit weaker because everyone's talking about raising rates a little bit, and the whole media circle out there is talking about how that's going to kill the housing recovery. So it's going to pressure a little bit on the home builders. You know, you look at the XHB, you'll see, you know, you definitely see relative weakness in here now. You see the spiders at highs, and look where this is. Okay, it's not even, you know, near it. It hasn't even taken out the high from, what was this, late May. So all said and done, it's still hanging around. It's still basing. You know, I would say you could be long a little bit in here, but it needs some time. Okay, the next time, you know, momentum comes in, the home builder is going to have to trade above, you know, 3140. I still think they can go even with higher rates. I don't think the housing market topped out at all. You know, but you go to the weekly chart of the home builders, and you know it's had a big move. And not to tout anything, but last year at this time, I wish I could play it. Maybe we'll find out on the next commercial. We talked about buying the home builders, you know, in 2012 with Kramer, and how a home, you know, a homing beacon. No, the home builders and the housing market could help the economy, and that's exactly what took place, and that's what QE did. It drove rates down so people could afford mortgages, they could refinance their house, and boom, housing market went up. People felt better, a little wealth effect, and lo and behold, we're at all-time highs. Now,
if we take a look at some of these names that he mentioned, do any of them appeal to you? What do you think is the best out of these? He has said Lennar, KBH, and DR Horton.
Okay, so let's go. So I put up Toll. So let me do, whoops, sorry. It's all about me. Toll, you know, it's trying to hold above the moving averages, above 35. Toll looks good. Lennar, let's take a quick look at that. These things are just not acting well. Lennar is below the 200-day, you know, below all the moving averages, below these highs. This is not acting well. I would not, you know, I'd be in very small, and if you're in a little bit at all, you know, if it were to break this, you got to get out of the way. It's just not acting well. It's, you know, and when they don't act well, you don't be in them. What was the other one?
KB Homes, KBH.
This one's acting a little bit better, but there are a lot of stocks right now that are making highs, and this is just by the 200-day. So I would just be careful with the home builders. The home builders are now, you know, are just out of play, and I think you just got to give them time. And you know, if you look, like a lot of these trends have been broken, you know, and it's just not the place to be for alpha. And especially now, if we make a little bit of a move to like 1700 or something, and then pull back, and these things are down there, they'll probably be the first ones to sell off. And some of you have even saying tomorrow there's this big timing cycle, you know, that tomorrow is the day that the market falls apart. You know, I'm not an astrologist, but there's a guy out there, you know, I'll say who his name is, fractal, something like that. He's been a bull for 4 years, and he's been right, and he's been buying dips, and he's been very adamant, and he sent out a note saying, be very careful that on Friday, there's a major down cycle going to hit, and that's tomorrow. So if we do wind up, you know, I think if we do wind up, you know, selling off for some reason or something happens, these stocks that have been the weakest will probably be those that get pressured first.
Sounds like one of those doomsday predictions.
No, this guy's not a doomsday guy at all. It's like he's a cycle guy, and he's been very bullish, and he just, you know, on Monday he started talking about how Friday you want to be, you know, you want to be less risk on. So I have a little less risk on. I tweeted around 3:55. I said I have less risk on than I had last night. You know, so we'll see what happens tomorrow, and we'll see. You know, again, you know, just real quickly to go back to the SPX, I don't think there's any reason to be bearish until we break at least the 8-day moving average and close below it. You know, we talked about you need to see an outside day. We didn't see that. We closed a little bit above that. I guess tomorrow, if we were to get like a matching day here, where the SPX all of a sudden, you know, goes back below, you know, 1681 and back in this, maybe it would be sort of like this, like, you know, this kind of, this breakout failure, which is right here. Okay, when, you know, so the only day that his thesis could come true is if all of a sudden we get a bigger down day than we had update today, and then that would probably scare a few technicians like me.
All right, keep an eye out for that.
Just, you know,
see what happens.
Throwing it out there.
How about Baidu? Mr. Traveler here says, hey Scott, what do you think of Baidu? Move from 86, have room to go higher?
You know, this one lit up, you know, the network with the. I'm just trying to come up. I'm not just.
You tried for the Reddit for it. It's okay.
Just, you know, let me have a little bit of coffee.
Bear with us.
Bear with us. Anyway, you know, Baidu, this stock that's been left for dead, woke up like 2 weeks ago and had that acquisition or whatever that news was, and gapped up. That day paused, and then it's been a nice, little run through, since then. So you look here at Baidu, and you will see that it's definitely acting better. I did actually a video with Deb from the street, talking about it, how it, maybe people need some long exposure. China might be stabilizing, whatever. This was when we talked about the entry number 1, and then it gapped up right here. Okay, and we talked about it, we do it in our swing trading course also. If a pro gap like this doesn't get filled, it shows power. It would have been nice for it to sit here for a few days, but it didn't. Second day, turned green. Today, it traded above, closed strong. And now I guess you got to go to the weekly chart and see that, it's starting to wake up. Okay, here's support going sideways. On the weekly, here's where it took back the 200-day. You could draw somewhat of a downtrend here that it's above now. So a stock that's been pretty rangy and almost out of place since 2011 is starting to wake up, but we've seen this before. So we'll see. As of right now, nice little few-day move, multi-day move, showing you how you could trade a laggard. And now I'd say use 105. Be long versus 105. If this gap stays intact, maybe some pressure will be there, but just also be careful. Earnings are coming out soon, so you got to know your time frame for that. And we'll see how it reacts to Google's soft earnings today.
You mentioned time frame, so I thought I would just bring up two Cuban for you right here. Said time frame alignment is important, but what would you call the most important time frames for intraday trading?
What's the name of that? That was kind of cool.
Two Cuban for you.
Two Cuban for you. All right, nice. So I guess the question is time frames and what to use on a
for intraday trading. What the most important time frames are?
Okay, so let's come to me and let's talk about it. Okay. It depends on also your real estate. I myself, I have 6 screens, so I could use it for a lot of different things. So I typically have, a 3-minute chart, a 5-minute chart, a 15-minute chart, a 30-minute chart, a 60-minute chart, and then I have my daily chart. My daily chart is what I do my, nightly work on and my morning work on, and that's how I come up with my pivots. My 3, 5, 15, 30, 60 is, for continuation entries intraday. In the beginning of the day, what some people do who are just active traders, they start out with the 2-minute chart, and then by 10 o'clock they turn it into a 3-minute chart, and then by 11 o'clock they turn it into a 5-minute chart because there's more data that comes in, and this way you don't get so chopped up. So with that said, you have to figure out how active you are and how many monitors you could use. For me, I think I have about 6 charts up. I have like 12 level 2s. I have market screens of all the sectors, and you got to process it all at one time, and that takes time to do. But if you have like 2 screens, I would go for, the 3 and the 5-minute chart and maybe the 15 or something like that. But, you got to break it down, but you start smaller time frame, and as the day evolves, you add to it. But really the way you come up with core trades is when all the time frames align and the price pattern's tight, and then it resolves and it ignites.
How about SandRidge Energy? Red Dog, what are your thoughts on SD after the 2-day run? That comes from D. Wayne.
On which stock?
SD.
SD? Mm-hmm. Let's take a look. Ah, nice. We talk, this would actually satisfy my day 1, day 2, day 3. Okay, because this is a laggard trade, not a leader. So what happened here is a laggard trade woke up. So how does it wake up and how does it get put on the radar? With a day 1. So this is a day 1 igniting bar that took out this downtrend. So right there, that's your day to enter. Okay, today it looked like it opened lower, so maybe you could have added through yesterday's high and it closed pretty strong. So if you were in tier 1 here, got into tier 2 here, I would have definitely taken home tier 1 considering it closed strong, but then on the next day into the 200 day, maybe it sees a little resistance, so I'm rarely a buyer on day 3. I'm usually, buy day 1, buy a little bit more day 2, and I'm a seller on day 3 if you get it. Then day 4, day 5, day 6, I'm probably crying because I sold it too early.
How about Microsoft? We talk a lot about the slowing PC sales issue. They just had to cut the price of the Surface RT tablet. We have one from Daj here who says, hello Scott, what's your opinion about Microsoft?
Okay, well let's look at see where it's trading right now because I think the earnings were really bad after the close. So let's quickly go to the chart. Here's your daily. Let me see if I could get the after hours. Time tablets, no, go West Coast. Now we see if we go 5-minute. Yes, here we are. So Microsoft right now is trading at around 35.50. Okay, so now let me go back to the daily chart, see where that is. Where did I draw that line? Did it come back? Let me see. What do you have in Microsoft trading on your phone? So I just want to make sure. Let's see. Let's check it out.
Okay.
Hold on. Here, you check it out while I talk about Microsoft for a second.
All right.
All right. So anyway, Microsoft's had a big move. Okay, a lot of people know that the PC sector's slowing. It's been, a nice trender until finally it broke down a little bit with the market. Did hold higher. Didn't make it all the way down to the 100-day or 200-day like some other stocks. It held the 50. Had a little bit of a breakout here, and then there was a little bit of, I would guess, anxiety going into earnings, and rightly so, considering Intel wasn't great. There is a slowdown on PC, but people were hoping that maybe, their software presence, across the board could be a savior for them. So lo and behold, earnings came out, not the greatest, and now it's down at 33.60. So it's coming right into here. So with that said, if you're not long Microsoft and you don't take stocks into earnings like we recommend, down here it'll be worth the look versus this pivot. Okay, and then you need to see how it responds to it, because you look at something like Intel today. Intel came out, okay, reported earnings, and now it's got a big hole. Okay, so this is how you do it afterwards. Here's your hole in the chart of Intel. Okay, so now you want to see how quickly does it take to fill this hole. If it doesn't, and it hovers down here for a few days like this, and doesn't find buyers because they could buy it cheaper than from the earnings, then perhaps it continues to the downside, and then you have to test this level. So then you look at something like eBay also. What did eBay do? eBay gapped down, okay, after earnings, and this one's a little bit different. This one now you have a small doji. Okay, you have it came off the lows, but it didn't actually close in the highs, and has a huge hole. You know what a hole is in a chart? It means that you could have if you went out long at 57.38, means that if you don't have it, you get to buy it on sale. And if nobody wants it on sale after a big move lower like this, chances are it has to go more on sale before demand comes in. So right now on this one, all you have is a high and a low, and you have to figure it out. But all in all, for Microsoft, you have to see how these things respond to earnings. And right now, it is opening. We'll see how it opens tomorrow. It'll be near this area, and see if it holds, and maybe you could trade long versus it. But usually, if a stock doesn't reverse, on what it's supposed to do, after earnings, then I'll just leave it alone for 3 days and then figure out if there's like a gap fill, cash flow type trade or continuation trade in the direction of that move after earnings.
All right, well, that's all the time we have for questions, but as we head into the last trading session of the week, what will be your thoughts, especially after what you've heard about how we should be risk off heading into tomorrow?
I just think that it's the summer, so you gotta keep it simple. Everyone's trying to make all these predictions on how high we're going to go, or when the correction is going to come, or what's next. But really, what's been working is rotating in and out of strong sectors. Using a tier system, and there are conducive times to have more risk on and conducive times to have more risk off. At this stage, even though we did poke our head above the all-time high, doesn't mean you go all in there. But it doesn't mean you just get short because you think that we can't go up anymore. Look at something like this here, just real quick. MGM, we've been talking about this for a while. MGM, we talked about getting like a tier 1 in here as it was setting up. Remember this, quick, fast move, held above this, had it off the charts. Then today was your cash flow move. So tier 1, tier 2, get back to tier 1 on the close. If you have a weekly, chart and you want to see how it goes, or even a monthly chart where you have a longer-term time frame, look at this monthly chart, look at the size of this channel it can go. What I'm just saying is, like, every day there's new opportunities, and there's only opportunities there if you know how to approach it with a tactical plan. Like those 2 days in Tesla, those are active trader dreams, and those people don't know those active tactics. They were, oh my goodness, I can't touch that thing, it's too fast for me. But meanwhile, there's a lot of opportunity there. So if you want to learn how to actively trade, what I would recommend, it's not a sales pitch, you should go into Steve LeVay and Mike Lee's Momentum course, because that teaches you how, if you come in flat every day or almost flat, you can create cash flow from small time frame patterns. Same thing for the active course, but you have to actually take the course and learn how to use it. If you're an investor and you just want to stick with trends, more swing trading trends, more longer term trends, then you can maybe look at my course, or you could just learn how to, follow trends until they change. We're coming out with actually a new course soon called the Foundation course, or a core course. So there's like a lot of ways you could educate yourself, and learn how to fish versus looking to get a fish thrown in your boat. Because so many times, I'll be on the road And it's actually cool now because people are like, oh, I see this red dog reversal developing here. Oh, I see, day one over here. I'm like, you guys are learning. They're like, well, you in it? I'm like, well, I'm not in my desk. Doesn't mean you can't be in it. So
right.
what we try and do is we try and teach you how to approach the market on your time frame. Then hopefully if we're in it also, it gives you conviction to stay in it. And that's also what the virtual trade floor is for. So you could see our strategies actually get implemented. You could see when I talk about this morning, I come in flat Tesla and I'm like, you know what, I think it's a better short than a long, use 121.50 as a pivot, and then you saw it go red on the virtual trade floor, meaning I got short somewhere around 121.50, and then they saw it leave when it went below 120, and that's all I wanted to make is a little cash flow, but they were able to see my thought and then see it executed, and then they could also do it alongside, and that's what the virtual trade floor is for. Okay, not everything's gonna get done on Twitter because you see these two thumbs? It's not, I need like 10 more thumbs.
Only so much you can do.
Yeah, typing 9:30, 10, you're adjusting positions, you're adding positions, you're talking on the radio. So just, there are a lot of resources out there. And I think that, you should really look at our site and figure out what resources fit into your trading approach or your just market approach. So that was a big sales pitch without a commercial. Anyway, it works and it can be done. And just take a glass half full versus glass half empty. And at some point, if the market starts acting poorly on good news and things start breaking down and we start seeing negative patterns, we'll be risk off and maybe we'll be short and we'll wait for another time where we could put back some longs and get going again. And until that happens, just stay with what's working.
And hopefully we helped you tonight. Thanks for your questions, everybody. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.